What's going on, traders? Pat here. Today is Saturday, October 12th, 2024, and this is my review of the week of October 7th through October 12th. I did not take any demo trades this week. I traded only my eval, and this is my curve. I ended last week right around there at a new high, and then Monday I took it down a little bit, and then on Tuesday took a break-even trade, then took a loss and took a really nice scalp with a nice runner, bumped my curve up just shy of 51,500 mark, and then didn't trade Wednesday. Kind of tried to enjoy my pinnacle moment, and then Thursday took a big nose dive like that. And then on Friday, I took one single scalp, took some partials, and brought it back up a little bit. So made $75 on the week. Kind of lackluster. But I wanted to talk about this nosedive right here and kind of show you my trades that I took on Thursday that sort of led to that. So let's go ahead up to the video here. Actually, let's go check out the chart. We'll check out the chart on this. So Thursday we had CPI news release, made this nice data wick up here, a nice data wick down there, and data wicks are something that I hunt out. They get ran almost every time, if not that same day, a little bit later. So I keep those on my chart. Those are strong draws. This data wick especially left a relative equal high with the prior day. So previous day high, it was just shy of that. So I'm thinking there's a bunch of stops sitting up there. And so the market's going to want to run up there sometime. Now, after we dumped from the CPI data, we kind of pulled down here and we opened up this nice fair value gap right there. That's actually two fair value gaps. And so the way I trade is I look for these to get inversed, especially if they're delivering from either a liquidity sweep or another higher time frame fair value gap. I look for them to get inversed and then to take out the next internal liquidity. So my first trade was this right here. I think I entered on the 1 minute close above, and then I sat through, and then eventually I put my stop below here, and then I stopped out there. So I can show you that video really quickly. So there we are. In case you don't know, I trade on my phone all the time. That's my primary way of trading, is I look at my phone and I analyze the chart on my phone, and then I'll go to my computer once in a while. But for the most part, I'm walking around, I'm doing things, I'm running errands. I got a lot of kids, and things are pretty busy for me. So I'm always on the go, but I'm always have my chart. So I do a lot of my trading on the phone. So this is the first trade I took. Fast forward it, see down there, I put my stop below the low right there. I figured this was going to be, if this was going to be a protected low, then the market shouldn't go down there. And then just after the open, the market went down and took out my stop, and that was okay. All right, that was a good trade. I would trade that one again. If that shows up, 90% of the time that one's going to work. At this point in time, I'm still fixated on this data high and looking for a way to get up there. And so as we go down here, I see, okay, well, there's a liquidity sweep. There's delivery from this fair value gap right here. And we're now inversing this fair value gap right here. So that is my model. That's the model I take. And so I go ahead and I enter this one at 6 contracts, which is a little bit more than I would normally do. A little bit higher risk. And so that's kind of one trading error that I made. And then this actually works. It takes out this internal high right here, and then it dumps down. So let's go ahead and check the video on that one. So the market inverses a fair value gap. I go ahead and I enter, put my limit order up there, and it takes out the internal high, move my stop to break even, and I get stopped out immediately. So that was that. Now what you see right there, that was the big error. You see how I just re-entered right there? I got way too excited about that. I kept thinking, okay, these data highs are going to hit, and we inverse that fair value gap, and now we're just coming down to dip back into it. But what I didn't see is this right here, is that this little high right there that went into the fair value gap, it got taken out, and then you kind of had a bearish reaction to it. A lot of times when you get a high that's inside a fair value gap taken out and then a bearish reaction to it, it becomes a protected high. Dodgy talks about this. You can go to his website and check it out. But the idea is that if smart money sold on the liquidity in here, they're not going to want to get out until it takes out further downside liquidity, which is down here. So me going to break even after this trade is what saves me from this kind of scenario where protected high is. If the market was going to go higher, it would have inversed this little fair value gap right there and kept going, but it didn't. And so that's the biggest trading mistake I think I did. For me, that ended up being a max loss day. So I try and keep my max losses to about $350. And that's because my equity curve can support that. I don't like to take those max loss days, but going from here all the way up there and then taking a little bit off of right there, that can support that. It's a mistake. It's not a big mistake, but it is a mistake nonetheless. And, you know, after being on this high of, you know, this is the best I've ever done on the evaluation account, and then, you know, hitting a max loss day the next day and coming back and showing you guys I made $75 this week. That's been that's kind of been with me for the weekend now, and something that I don't want to do again. And I think my biggest mistake really here was, instead of this was an impulsive entry, that's for sure. That was an impulsive entry, and so trying to eliminate those impulsive entries, and also just not re-entering after I've stopped out. I would say my biggest account killer in trading right now, and the thing that causes most of my drawdown, is when I enter again after I've stopped out, even though the trade idea might still be valid or it might not be still valid, but I'll do like an impulsive re-entry after I've stopped out. And so that's one thing that, you know, I'm a little bit embarrassed to be showing you guys this, but I am a human, and this is being transparent, and this is one of the downs of my journey, and something that I intend to remedy. And one way I'm going to remedy this, and I would suggest to anyone, if you don't have like an accountability partner or a group that you check in with your trading, I think it's highly important. So my accountability partner the other day tells me, you know what, how about this? Every time you take an entry and you get out of the trade, you check in. All right. So if I stick to that, I get in this trade, I get out, I check in, instead of impulsively re-entering. Because even if I impulsively re-enter and this wins, there are so many trades out there that set up in a day, and I would have easily seen this one right here and taken that one if the other one didn't work out. So that's what I'm doing to remedy the situation. I would encourage any of you who are looking to change your trading habits to look to accountability partners, someone that can kind of call you out and make it a little bit more uncomfortable and harder for you to do some of these impulsive things. So that's my bad. That's what I got to live with this week. Overall, though, you know what? It was a decent week. I made money on the week, so I'm happy about that. Had a really nice trade on Tuesday. Really happy about that. I was able to afford a max loss day from that trade on Tuesday, which I'm not too stoked about, but I'm also okay that I was able to walk away and my equity curve was able to support that loss. So a little bit bittersweet this week. But anyhow, that's my week. I hope you learned a little bit from this. These are some ICT concepts that I look for when I'm reading the chart. And if you like that, like and subscribe, and I will see you on the next one. Take care now.